Hey, everybody, this week Paul and I are going to dive into a poem Paul just happened upon again by Robert Frost, right?
Robert Frost.
The
Yep. The
Road
Road.
Not Taken.
That's right.
Not the road less traveled, the road not taken.
Often confused with a poem
Yes.
that doesn't exist called The Road Less Traveled.
Yeah. So anyway, what did we hit on a few things about
Yeah.
the two
So
different roads you can take.
basically, yeah, it's kind of an analogy, right? Where we kind of relate the infinite banking concept is the road not taken, right? And the road that is taken is the 401k route, the IRA, the Wall Street 529s, buy term and invest the difference, whatever, all that stuff, right? That your neighbor's doing and everyone you know is doing, and the one that your Uncle Bob says that you should be doing. So, but we kind of, just kind of a thought podcast episode, I think, get you thinking a
Yeah.
little bit.
Dare to be different. Take the road
Yeah.
less traveled. All right, everybody, enjoy.
Hey, I'm Dave,
And I'm Paul.
and this is the Wealth Warehouse Podcast.
All right, try number 3. Keep
This is
freezing
take
up
3,
on me.
folks. You don't
Yeah, take
realize
3.
this, but I was having
Yeah.
some technical difficulties with my whatever that is. Modem?
Yeah, something like that, where your screen
Something
kept freezing. And it's always, anytime a screen freezes, it always freezes you in a very unflattering,
Yeah.
face. One eye is
That's
half
right.
closed.
Yeah, you're like,
mouth's open. Yeah, exactly. Yeah. Well, cool, man. Good to see you again.
Yeah.
You're
too.
back in the office. It looks like there's no Anthony running around back there making
No,
himself.
there's just a dog.
It blends in.
Yeah, he's really there he is.
Yeah. Yeah. Cool, man. Cool. Well, I guess since last we talked, I got back in the swing of football now. So we got football, 4 nights a week for a couple hours, and games start next week. So, man, it's gonna be fall here before we know it.
Yeah. How's the weather been up there? Is it hot?
Hot. Yeah.
Yeah, it's hot here.
It's been
too.
hot. So, and rainy, real rainy. But I don't complain because it's going to be cold real soon here.
That's right.
And then I'll be complaining.
Summer to winter.
It is summer to winter. I'll be complaining all winter long.
Yeah.
So we don't need any more of that. All right, man. Well, today you must have been reading some poetry or something because something struck you.
Yeah, just got struck. We sit around trying to think of things to talk about as it relates to the subject. Now, this is episode 185. So 185 weeks without missing a week.
Yeah.
And sometimes, not that it's difficult, but sometimes we get inspired by maybe a client call that we had, or a prospective client call, or something that we heard from somebody else, or whatever, or just stuff that's out there in the wide world. So yeah, today we were kind of thinking the same thing, but we just didn't know it, which is scary.
Yeah.
Two great minds. Great minds think alike.
Yeah. Well, if you put us together, we have half a brain. So.
That's right. So today we're going to discuss. So I always liked the poem, often mistitled out there when people talk about it, but it's Robert Frost's poem, "The Road Not Taken." So we thought
no. That's not what it's called. That's what we think it's called. Right? Wait, no, that is what it's called.
No, that is what it's called.
I always thought it was the road less traveled.
Right. Everyone
Yeah.
wants it to be that.
Yeah.
But it's not. It's "The Road Not Taken."
Well, I think for the title, we'll call it the road less traveled because that's what everybody knows. But now we actually really do know the actual title of the poem.
Yeah. So I don't know if that'll result in like people thinking we're dumb, or if they listen to the episode, they'll realize that we do know what the title is.
Yeah.
And won't think we're dumb, maybe. I
We
don't
do
know.
know what we're talking about most of the time.
Right. Not a poet, not super into poetry, but always liked this one. And I think it fits, the IBC lifestyle, not only from the agent perspective, but also, I can't tell anyone what I'm doing because they're going to think I'm nuts.
Right. Yeah. Because, what's the essence of that poem? Like most people probably know, but if you don't,
Yeah, I think it's about being. I think for me, I think like a free thinker, kind of going against the grain. Like, you know what? Everyone's doing that. I'm going to go do that. That's how I think about it. Very very simple.
yeah. So it's not following the crowd, not following the mainstream, not following the conventional path that's laid out before you. I mean, from grade school on, there's
Yeah.
that conventional path and the conventional message that's preached to you, and sometimes parents end up preaching that to their kids without even questioning it or wondering how they got that idea, which is the typical, like Robert Kiyosaki outlines in Rich Dad Poor Dad. Go to school, get good grades so you can get into a good college,
Yeah.
and so that you
Become
can
a
get a
highly
good job.
compensated employee.
Yeah, so you can get a good job with good benefits and have job security, and then go get married, get a mortgage, get a boat, get a car, live the American dream, all on credit cards,
Right.
and repay your student loans. I saw this Instagram reel of this girl just bawling her eyes out, just venting to the camera. She's like, "I'm $90,000 in debt, and I've been paying $1,500 a month for the last year, and my balance is more than it was when I started. How did that happen?" She's freaking out, like, "How am I ever going to pay this?" And student debt is the only debt you can't wipe away from bankruptcy, right? You can't. I think even if you die, does somebody take that on if you die?
Ooh, you know what? Chime in the comments. I have no idea
I
because
think
I
if a
never.
parent co-signed or something like that with FAFSA and all that, I think the parent's stuck with the debt if the child dies. So, not to God forbid
I'm not
that ever
co-signing
happen.
for anybody
Me
ever.
neither, never. Because I don't tell my kids, if you want to go to college, you better pay cash and work your way through. Who convinced you need to get through to college in 4 years? Like, it could take 2, or it could take 6. Why does it have to be 4?
Right.
You could go
I don't
in
know.
4 years, graduate with 90,000 in debt, or you can go in 6 years and graduate with 0 debt. Who's really winning in that scenario? Or
I knew
in 2 years.
plenty of people that worked. They'd work
Yeah.
back. It was called work study. They would work at the library or at the bookstore or whatever they did.
Yeah.
Right. Or they worked out in the economy, or they did both, and that's how they
Yeah.
partly paid for school.
Or you take those college credits in high school for free, or you go to a community college for 2 years and then finish at a university. Nobody cares where you graduate from.
That's yeah. If you're not right.
Yeah.
I don't care. I don't put much stock in academic pedigree. I mean, there's plenty of people from the Ivy League screwing up this country. Just look around.
Absolutely. Yeah. So anyway, that's the conventional path. Not that there's anything wrong with going to college and becoming an employee, not at all.
Nope.
But that's the road most often traveled, right? Because that's
Right.
the one that's right out in front of you. What does that road also come with? All those benefits that everybody thinks they want, which is the 401k,
The match. Got to get
The
that
match.
match.
the match, the 529 college savings plan, which is actually an investment plan.
That's one of our favorite things to talk about on this show, and I've encountered that particular thing. Everyone knows the 401k, and it's a mixed bag with the 529. Some people are like, I thought that was stupid, and that's encouraging when I hear clients say that. Oh, I never did. I thought that was stupid.
Yeah.
Or I have clients or prospective clients that the whole family the grandparents contribute to it, they contribute to it, and fast forward a few years, now you got 100 grand sitting in one of these things, or 200 or something.
Yeah, several $100,000. Like, is your kid going to be a doctor? What if they don't want to be a
Well,
doctor?
maybe.
What are you going to do with all that money?
Yeah, well, possibly, but I wish I could just rescue all these people and show them, just plug in a compound interest calculator, what the opportunity cost on $100,000 or $200,000, and just use a reasonable rate like 5%. Right, that's reasonable. You can actually
Yeah.
get that in a CD right now, certificate of deposit right now. You
Sure.
get 5%, and use that and see what you're giving up over, I don't know, the next 30 or 40 years.
Yeah.
And if it's millions of dollars.
Yep.
And if you just changed one thing, in this case, the sequence of those same dollars, you would still have those dollars and the earning potential of those dollars 40 years from now.
Right. And the earning potential has grown into a greater amount. I mean, potential is just future possibility, but it's actually grown and it's better every year.
And then we were talking before we recorded too, is the unseen things once that money is gone. And it doesn't have to be 529 money, folks. It could be whatever money. I don't care. It could be mortgage money. It could be all the interest you're paying to somebody else's bank, whatever. However you need to think about this. But the unseen is something we need to think about, and that's the things that you will not see, that you will not think of because you didn't have the capital to participate. There might be a great thing that you want to do, that you want to participate in, that you want to buy, that you want to finance. And you're not going to be able to take advantage of that, maybe at the level that you'd like to, maybe at a reduced level, let's say, which is okay. But, that's not something I can illustrate. We can talk about it. And my job is to make you think. But there's millions of people that are going to fall into that category because they have taken the road well-traveled.
The road well-traveled, and it looks easy because it's made to look easy. I mean, it's paved, right? They make it very easy to automatically invest. I mean, some companies now...
Automatic enrollment.
They have the right to automatically enroll you, and you have to raise your hand and say, no, I don't want that, in order to not be enrolled.
That's
and
right.
How many people are going to do that? Because you walk into HR and say, I don't want to enroll in this 401k. They're going to raise their eyebrow at you and be like, are you serious? You don't want free money?
Right.
They make you feel bad, make you feel like an idiot, like you got a third eyeball. But so it's made to look very easy. I visualize it as one of those moving walkways in an airport.
Yeah, chime in the comments. What are those called?
I think they're just called moving walkways. I don't know. We said escalator, and we're like, that's not right, because escalate means go up, go down, de-escalate, right? So They're moving walkways. Maybe there's a better name. But, Minneapolis, MSP has them all over the place because it's a
those
huge
are nice.
airport. And they're really nice if you're in a hurry. But so many people get on there, and then they just stop walking. They just get on their phone, and they're actually traveling slower than somebody who's walking at a normal pace on the carpet beside them. It's
correct.
But it's easy. It's the easy path. And most people will select that path even unconsciously because it's easy. Their brain says, hey, I'm looking for the easiest thing. I'm like water, path of least resistance. That's where I'm going. They don't even think about it until you're on that moving walkway, and you're like, what am I doing here? Why did I stop walking? I should be walking.
I walk on them.
I walk beside them and stare at people as I'm walking faster than them while they're on the walkway. It makes me feel better about myself. Yeah. No, they're good when you're in a hurry. But it's also, another visual example is how many times have you booked a hotel and you're like, wow, this is a really nice looking hotel. Man, the atrium, they got pictures of the, freshly cleaned entryway and the pool that was just cleaned and the trees and all this stuff. And you're like, okay. And you book that hotel, but then you get there and you're like, this is nothing like I expected.
We've done that.
There's hair in the bathtub.
It's a picture from 20 years ago when they rehabbed it.
Kind of like a realtor's photo.
Kind of like a real estate agent's photo, or maybe a hotel that we stayed at in Vancouver.
Right.
Once upon a time, a few years ago,
those.
It's I don't know this because I'm not on these things, but like people that are on like Tinder or whatever these dating apps are, and you show up to this blind date and you think it's going to be what Sally looks like in this photo, and that ain't Sally. That's a AI generated photo of Sally's best day.
She walks in and she's like, "Oh, You were the other person in the picture. Oh, my bad.
Oh, I'm so
Yeah.
glad to be married. Happily.
Yeah, right.
Not have to deal
It's a
with
good
that
thing.
stuff. Oh my goodness.
But that's what I feel like that hotel analogy. People get to the end of towards their retirement years, and they're taking a look at their assets, and they're like, well, this isn't at all what I expected to end up with. I expected to have so much more. How am I going to live on this for 30 more years? What's my income plan? Because nobody's thought about an income plan. They just think about a retirement plan. And what does that mean? Oh, I guess I just put a bunch of money away.
Yeah, you gotta really define.
I give
that
it to
and think about
somebody
it.
and they create some magic,
It's magic.
rub a magic genie. I have no idea what they do, but they told me, trust me, 30 years you'll be set. 30 years later, where's all my money?
You're not.
Yeah.
Yeah, that magical 12% that you were told you'd get in a mutual fund, which
Right.
somehow people are still like listening to that guy and believing that nonsense. I'm sorry
Yeah.
that what he's saying doesn't exist.
No. That's
There's
a
no mutual
bold-
fund that has returned 12% uninterrupted compound year over year
Right.
for the last 20 or 30 years, 40 years, 50 years. It doesn't exist. I'll tell you that right
Right.
now.
I mean,
If
the
it
only-
did, I would. If it did exist, I would own it.
Yeah. Or you could just copy Nancy Pelosi's picks. There's somebody who tracks all
Oh
of
my
her
God,
picks,
that's so awesome.
and then just copy them. You'll be set. I'd do that before I gave money to anybody.
Yeah,
Or
it's amazing. You have someone that's made like less than 200 grand her entire adult life, who's worth. You can say the husband, whatever he's doing, but he's obviously got insider information because he's on the inside. But
yeah, but a net worth.
then
of what?
you turn that into a 10-figure portfolio.
Yeah.
Like pretty good,
Yeah, that's pretty good. I mean, you must be a really smart lady,
savvy,
very savvy. Yeah.
a better investor, in fact, than Warren Buffett.
Yep. I've heard of that guy.
Yeah.
So that's the road most often taken. What's the road not taken look like? It's unfinished. There's not many people on it. Right?
Yeah, maybe it's. I'm thinking about the cartoon Beauty and the Beast when the father's trying to go this way, and the horse's name was what, Philippe, I think, and the horse is like looking at the butterflies and the light down that path, and he's like, "Hey, let's go this way." And of course,
Yeah.
Dad ends up at the beast's castle, right? And well, it worked out in the end.
Yeah.
It was scary there for a while, but yeah, it's rough.
It's unpaved.
It
It's
appears rough, maybe.
Right. Well, and it's an uphill climb because nobody's really blazing that path for you. It's not a moving walkway that you just jump on and then sit on your phone for the next 30 years and expect to get really far.
Yeah.
No, it's a climb. But what happens when you get to the end of that, you're at the top of a hill and the view is much better.
Much better. Dave, I'd be interested to know, because I haven't encountered this from anybody that I know, whether they're a friend and not a client, or obviously if they're a friend and they are a client. But I'd be curious with the audience and our client, our podcast clients, have you guys or gals encountered kind of the Uncle Bob in your personal life who says you're on the wrong path by implementing the infinite banking concept? You encountered that, and you can shoot us an email or just chime in on the comments on YouTube or wherever. But I'd be interested to know, like, have you experienced that in your IBC life as you share what you're doing with other people?
Yeah.
Like, yeah, I do this and I do that, and it'd be interesting to know that.
I certainly did at the beginning. I think when I was exploring it or when I just started, I remember going to some people who were more financially savvy than me.
Yeah.
And I remember talking to one guy who kind of taught me a few things about investing. I said, what do you think about whole life insurance? He's like, don't do it. Buy a term and invest the difference.
There
Just
you go.
rattled it off. And it kind of rattled me a little bit. I was like, well, shoot, man, I think this sounds like a good idea, but I'm not as smart as this guy. So maybe he's onto something and I'm not. So it took a while to get that confidence that, yeah, I need to stop taking advice from other people, especially people who haven't made it, who aren't where I want to be. I mean, if you're taking advice from somebody who is in a place that you don't want to be, why? Why would you take advice?
Right. And that's not to say, like, odds are you know someone very successful, very well off, very well to do that doesn't own whole life insurance. In fact, I've met them in this neighborhood that I'm going to be moving into.
And they may not even be business owners. Maybe they were highly
Nope.
paid C-suite executives. They
Yep.
took the road more traveled. They just did it better than other people
Yeah.
and made it higher, right? Made it farther.
But I guarantee you, if I could get them into a conversation as I move in there and talk to folks that, because a lot of them are not near the end, but they're closer to the end than we are age wise, right?
Right.
So it's think with the end in mind, instant liquidity of whatever amount gives those left behind just some maneuver space and breathing room. They can kind of
Yeah.
grieve, move on, whatever. But they don't have to worry about like, all right, where's this mortgage? Where's this check? This next bill going to be paid from or whatever.
You know what would be pretty effective, I think? I just thought of this when you were talking about people, when you say they're farther along than us. I'm thinking maybe somebody's 65, 70 years old.
Sure.
And maybe they don't believe in whole life insurance. They're like, that's stupid. But if I were to pull out one of my illustrations from a policy I started when I was 30 or 40 and say, look, when I'm 65, I'm going to put $10,000 into this policy. How much cash value is that going to create for me that year? They'll read it and they'll say $40,000. I'm like, would you like to have the ability right now to put in 10,000 and receive 40?
Yeah.
Or is that still a stupid idea?
Terrible.
Yeah.
I don't want that, Dave.
I don't want that. I'm glad I never did that.
I'm glad I don't have that option.
That would be interesting to hear some feedback from somebody at that point in life who totally hates whole life. Their only thing would be, well, I could have put it in the market and made a lot more than that.
Maybe.
But could you right now, could you take $10,000 today and turn it into 40 and access all that gain tax free? I don't think so.
No.
Show me where you can do that.
I'm sure there's some person out there that has some access to some special thing that only the elites can do. Probably. Sure. Right? But, average, typical person, no.
Yeah.
Not a chance.
Yep.
It would be one of those crypto. I put in $5 and then I walked out with 5 million 4 months later on Dogecoin or something. And I'm exaggerating the numbers.
That person's going to be broke again in 20 years.
Right. Yeah, that's right. You didn't do
last that long.
You went to the casino and you got lucky. It's just like
and I heard
won Powerball.
I read this or heard this somewhere recently. It was like money that was gained with effort that was that doesn't match the effort. Like you earned some money that didn't match the effort you put into earning that is not going to last. Correct. It's like playing the lottery. It's exactly what it is. Like you did nothing to earn all of that. So it's not going to do good things for you.
Correct.
More often than not. Not saying some people win the lottery and man, good on them. They turn $1 million into $10 million. Like that would be the goal. But yeah, more often than not, if you didn't earn it, because it's not about the money doesn't change you. It's who you became in order to acquire that money, the hill you had to climb to get to the point of creating that much value and earning that in return for the value you create. That's what makes you a different person, not just receiving the money.
Yeah, because it deserves respect. And through that journey, right, you're gonna learn to, it took a lot of work to get it, right?
Yeah,
and you want to keep it close.
You're gonna take a lot of punches, a lot of punishment.
That's right.
Yeah.
Yeah. So I think naturally, I think that's that's exactly right. Like you're gonna be a far better steward of money, of wealth, of capital than somebody who just got lucky, yanked on a handle and was $1 million richer as they walked out of that casino on their way to the airport. Like,
Yeah.
that money's gonna be gone.
Right. Yeah. So, the road not taken, we would consider the road not or less often taken, or the road less traveled, would be the route of controlling your own capital, pursuing the infinite banking concept, putting that into place, making that a part of your life, becoming your own banker, controlling your own capital instead of letting other people control your capital for you.
Yep. And I'm connected to the home building industry a little bit, Dave, through some private lending and other relationships, and that industry is ripe to see the value of IBC, but none of them do it.
Yeah.
Right. So if you happen to listen to this, or someone who's a fairly prolific home builder or developer or something, introduce this concept to them, because they are missing out. And I keep having examples come across my desk of undercapitalized people trying to do something that they want to do. They're smart enough to do it. And guess who's in the way? Mr. Controller of the Golden Rule, Mr. Banker.
Mm-hmm.
In the way every time. Oh, I'm
Yep.
sorry. Yes, you can do this, but we're going to need another $300K in order for you to do that project. Okay.
Yep. Yeah. Or they take every bit of collateral you have.
Oh, yeah. Oh, they take it all.
Yeah.
Yeah.
So if you're somebody who's just exploring this concept or hasn't started down the road of becoming your own banker, realize it's a journey. It's not like as soon as we discovered infinite banking, we immediately stopped doing anything else, like
Right.
put money in mutual funds or 401k or TSP in your
Yep.
case, or investing in, whatever, real estate or just stock picking. It was a journey. Like, I started infinite banking in 2010 with 3 policies. In 2014, I entered corporate America and I started a 401k. Luckily, I came to my senses within about 3 months and I quit. And I wrote myself a letter so that anytime I started to get cold feet about maybe I'm being stupid, I need to go back and start doing the 401k, I would just pull that letter out and read it. And it listed all the reasons why I quit my 401k, which is an episode. We
Yeah.
made an entire episode about that 3
That's an
years
old
ago.
one.
Old.
Yeah.
It was one of the first, it was 3 years ago, but that all came from a letter I wrote myself in 2014.
Right.
when
I forgot
quit
about
my
that.
401k. And then
Yeah,
I
that was a good
started
one.
another policy instead of doing the 401k. I said, I'm going to start putting this money towards a policy on myself. So I started another policy.
Yep. Yeah. So if you're in the mindset of, if you want to do something in the future, and this goes for anyone at any age here, you really need to start thinking, all right, who or how is that thing going to be financed? Because I have a family member. I'll talk about my sister, right? She's looks like she's going to be taking over a business in Florida. It's a great opportunity. It's all in her neighborhood. It's a pool maintenance business.
Mm-hmm.
So it's very turnkey. She's the only employee. It's just her, right? And 120 pools or whatever it is. And it's phenomenal, right? And, make your own schedule, whatever, 30 pools a day, however she's going to do it, whatever. But to buy this business, it requires capital, right? And, had the family been practicing IBC as a family for a generation, let's say, that would be a no-brainer. It'd be easy to go do,
Mm-hmm.
right? Either my dad's like, yep, here, I got policy over here that I opened up when you were a baby. It's got all the cash you need. Here you go. Here's a policy loan, whatever. Pay me back over 5 years, whatever it is, right? But,
Yeah.
that's not how it's going to go. So she's negotiating with the with the seller, who's very good guy, very gracious. So it's going to work out just fine. But it's just interesting that you never know. This opportunity came out of nowhere.
Yeah.
But no hint that he was going to walk He likes to go camping and he wants to retire and go camping. Great. He's 78. This guy's 78 years old, by the way. Built this business from scratch, like in the neighborhood, and does very well. Anyway, but again, if you're going to plan on doing something, and it doesn't matter if you're going to build something, build a house, buy some, people want some land that they can go, hunt on or go camping on or just do whatever, go four-wheeling. Someone's going to finance that, and it ought to be you.
Yep.
You ought to be financing and controlling that function for that thing.
Yeah.
If you want to guarantee that you want to guarantee the ability to go do it. Otherwise, you're just going to be, it's really just a dream.
Yeah. Create that ability for yourself. But then, like you and I were talking before this, you kind of focus on building your own castle first, and then you have the ability to help other people. I was having this conversation with a good buddy of mine. We're just talking about different people and their mentality about money, and the people who say, I don't really, money's not that important. I don't really care about money. What you're saying, you're making an excuse, in my opinion, to not go out and work, to not take a chance or not work hard or whatever. But really what you're saying is, I only care about myself. I don't care about anybody else.
Yeah.
Because you're only focused on yourself. If money's not a big deal and money's not important, I don't need much of it. You may not need much of it. What about people close to you? What about your loved ones? What about your grandchild someday who may have special needs and will need 24/7 round-the-clock care for the rest of their life? Would you like to be able to help them? Apparently not, because you're selfish. You don't care about anybody but yourself. That's the only reason why money doesn't matter to you.
Right. Yeah, the future's unknown, folks.
Yeah.
And
so maybe it's an unpopular opinion, but if you say money's not that important, I think you're a very selfish person. Because
you heard it here.
You're only thinking of yourself.
Yeah.
Truly.
And you're right. And the other thing that's what a lot of the time that's what holds people back from implementing IBC. There's not that
they don't want to leave money.
That's right. They don't want to leave it, or they think they're giving up some money, now and in the future in order to do this. Right. And they're not. That's a misconception. You're not. You're not giving up anything.
Yeah.
You're sacrificing. You have a temporary loss of liquidity.
Yeah, while you climb that hill.
That's it. So,
yeah,
man, I like the passion. I think it's and I've, in full disclosure, I kind of evolved. When I was young, maybe it was before kids, I kind of had that Dave Ramsey attitude. It was like, well, the next generation can figure it out. Because I was thinking they need to, mindset-wise, they need to be able to go figure it out. Learn how to tie your own shoes.
And they still can. You can.
And they still can.
They can do that even if you have a lot of money.
That's right. That's exactly right.
And
they know it, too, because our policy is you need to be worthy of an inheritance.
Right.
If you're not worthy, you get nothing. It's great.
Yeah. There you go. So, yeah, if you think money's not important, then don't call me. I don't want to talk to you. I'll be your friend. We can be friends, but I'm not going to work with you and try to convince you that money.
Just can't do business.
We're not going to do business together.
This part of IBC is, well, it's about money.
I mean,
and
life
the next
is
generation.
pretty much about money.
And legacy. Yeah.
Yeah, a lot of it is. So, take care of your castle, take care of your family, but capitalize so you can help others in need. Very likely, somebody in your family is going to be in need at some point during your lifetime. Wouldn't it be nice if you could be the hero and come to the rescue for a family member, for a loved one, for a close friend, for your dog who has bone cancer and you got to pay something to keep them alive, so they can live in peace for another few months and not pain. I have a friend who that just happened to them. And they're like, it's sure nice to have capital because otherwise this dog would just be suffering or, I'd have to take it behind the barn.
That's right.
Yeah. So, anyway, all right. Well, cool.
Good one.
So I will leave everybody with this. One of my favorite books, I was telling Paul before we hit record, that I used to read my boys all the time is Oh, the Places You'll Go by Dr. Seuss. And man, if that doesn't describe the journey of life and so many people who sit in the waiting place, waiting for something to happen, waiting for their chance, for their, their one big moment or their ship to come in. Like there's going to be ups and downs, whether you're on the road on the left or the road on the right. I tell my boys, there's only 2 roads in life and both are hard.
That's right.
So just pick your hard. Do you want it to be forced on you, or do you want to choose hard so that it can get easier?
I like it.
Yeah. Whether they listen to me or not, I don't know. Well,
Hey,
time will tell.
It's a crapshoot, right?
It's a crapshoot. Yeah.
You do the best you can. Like, here's the tools. Like,
Yeah.
I love you, and they're
Yep.
gonna be what they're gonna be. I think
They are going to be what they're going to be. So hopefully that helped. So, all right, everybody. Hey, have a great week. We'll talk to you next week. Until then, control your capital.
or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle on a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.